Hey everyone, tonight is a little bit late, but that's okay because we're still getting to it anyway. Today is March 14th. Where is it? Come on, pop up. Here we go, March 14th, and it is 9:30 p.m. So we're getting started a little late, only because we want to end up around the 10 o'clock hour so we get everybody in and answer any questions anyone might have. So we're looking at what kind of dividend stocks we're investing in. Hey, this is James from Dividend Stock Talk. I should probably come up with that and say that first. Hey everyone, it's James from Dividend Stock Talk. Anyway, we're going to talk about dividend stocks. Again, we do this every Tuesday and every Thursday right around 9:30 to share with you what we believe to be a very solid, very safe, profitable investment strategy called dividend capturing. It's where we buy the stock just before the EX date, and then hold it right until the date of record, collect the dividend, and then move on to the next stock. We're not looking for big moves. We're not looking for big chunks of money, just a small amount. And the more often we do this, the more money we make. We're averaging, double-digit returns for the year. Last year we did 53%. This year we're looking to take a little bit more than 53%. We've implemented this year options into our plays, but for those who want to deal with just dividend stocks, that's what we're going to look at. So we're going to look at some stocks that are going dividend today, or EX today. Not that one, this one. All right, here we go. These are the orders we put in this afternoon. And let's go and take a quick look at who we're looking at and give you an idea why we got into them. All right, first off, back to the Market Watch. On Thinkorswim is the trading platform I like to use because it's the only one that has the trigger trade. The trigger trade basically allows you to do more than one trade at a time. By the first order triggers the second order, which then triggers the third order, and so on and so forth. So let's say I wanted to buy something this morning, like first thing this morning, because I do all my trades the day before. Put my order in the night before, first thing in the morning, my order will get filled. The only way to sell it is to go back in and set my profit margins and then put an order to sell. However, with a trigger trade, it allows me to excuse me, my goodness. It allows me to preset my my profit positions. So I'll give you a quick example. AGU, which is Agrium Incorporated, is paying out a dividend of 87 cents per share. Okay? Now, let's say hypothetically I wanted to buy it first thing this morning at the market open, then I wanted to sell it for, excuse me, for 87 cents above what I paid for it. I would have what's called a trigger order. Let's quickly go over one and go real quick. That way you get an idea what I'm talking about. We said AGU, didn't we? AGU. Here we go. Let's put AGU in here. AGU in there also. Oh, this is not good. Anyway, it allows me to go into here. Buy custom. And there it is. All right, so it allows me to buy however many shares I want. See, there's two orders here. And the advanced order says first triggers all. We can click on this right here. That opens up this little window. Allows me to try and look at what orders we're looking for. Blast all is basically all the orders at once, whichever one fills first. I believe it's going to cancel all the other ones. First trigger sequence, which if you have one order, then it triggers another one, then triggers another one, triggers another one. And then first triggers all, which however many you have, you may want to buy. And then you may want to have a sell order if it goes low, and on a sell order if it hits your profit. So that way you're looking at either one, or first triggers one cancels other. Because you get the first one, then you have the other one. So there's a lot of different things you can do. But right now we're doing first triggers all. And we only have 2 trades. So the first order is a stock order at the market for the day. So it means first thing tomorrow morning, this thing would be filled at whatever the market is. Now, the market ended yesterday or today at 95.19. So if I wanted to buy this 100 shares at the market, okay, then I would turn around and automatically sell the same 100 shares, okay, triggered by 2.5% of whatever this one was. So whatever this gets filled at is automatically going to do the mathematical equation. You take whatever that number is, whatever the purchase price is, and multiply it by 1.025, which will give me my target price. That's already built in. So I can literally buy and sell within 2 or 3 minutes. I think the fastest I ever sold was, I think, 20 seconds. I was in, and 20 seconds later, I was out. I couldn't even type an order in fast enough to do that. But the trigger trades will allow you to do a lot. Manually or triggered or last bid, ask mark, blah, 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 all that stuff. Triggered, okay, here's that. And then we have plus or minus, which is, it goes, if it goes up or down a certain amount, you can already preset that in there. If I want to preset this for $1, I would do plus, and then I would get rid of that, and I put in 1.00. So if it goes up $1, then I automatically get out, and I have a limit order, and it's good till cancel. The EXT stands for extended times, which means it would go after hours trading, and it would go pre-hour trading. So you're not just there between 9:30 and 4 every day. You're there, in the morning before the market opens, and you're there after the market opens. So it's after market trading hours. That's what the EXT stands for. We confirm, and then what you want to do is you want to read the order. Okay, first order description right here. Now when we're doing this, we want to make sure that the first order is a buy order. So it's buy 100 AGU at the market to open. Okay, so that's opening the new trade now at the market. So then we want to turn around and sell at a trigger trade plus $1 with a limit, with good till cancel, extended traded by triggered by order number 1 to open. Okay. And what is this costing me? It cost me $6.95 to make the trade, and it cost me $9,500 to put the trade on. All right, I'm not actually going to do that, but that's how we do it. Just very quickly, right click, buy custom, fill that in, and I come down here and I fill in. This one is 2.5%, so I can cancel that, and I can do another one, which is, I have them already preset. This one here, 928 shares AGU triggered by 37 cents. Now this one is 87 cent, what do you call it? 87 cents dividend. So I go in here and I just change this to 87, and then I hit confirm. Now what happens is I buy the stock at the market price, and then I sell it at whatever the market price was plus 87 cents. And then there, it's automatically filled. So as soon as it goes up 87 cents, which is the dividend amount, which is all I'm looking for, I'm only looking to capture that dividend. So whether I actually get a dividend check or whether I get the dividend equivalents, it really doesn't matter to me. 87 cents is fine. Send it to me in the check or send it to me in my account. Really don't care. I just want that small amount. If I have to hold it until the dividend date, which is, I don't even know when, but it's coming up. Oh, that's right here. Hold on a second. Let's get out of here and I'll show you exactly what it is. Oh, I sent that order. Bummer. All right. AGU right there. Dividend date is the 29th. So that's at the end of the month. So that's 2 weeks from now. So I got filled tomorrow morning, and then I will get the dividend on that one. All right, that'll work. That works for me. All right, so we just go over the stocks one at a time. Now this one, AUY, is not worth chasing because it's only a half a cent. Now do I really want to chase half a cent For Yamana Gold Incorporated, never heard of them, but they're only offering a half a cent. What good is that? It's no good at all. CCJ, Cameco Corporation, only offering 7 cents. I'm going to say no to that one also because it's not worth my while. DE, which is John Deere. Now that's a good company. Let's take a look at John Deere. Must be, you know what it is? We had this blizzard up here, and because actually, if you look at check the news. It's the 14th of March, 2017. There's a blizzard up in New England, and so I'm stuck here in a blizzard, and everybody else is using the internet. That's why it's so damn slow. All right, so we're only going to make this relatively short, so we're not going to be able to do that. Go back to monitor, find out what we're looking at. All right, so we have these 2 orders here. That's the one I just put on. Okay, I can deal with that. Not a big deal. Okay, so these are all the orders we're looking at. And ATVI, we got 20 contracts. We're looking at the 48.5s, 49s. We can't do anything now because, like I say, we're waiting endlessly for the internet to populate. And let's quickly look at filled orders for the day. We did 11 orders. And what would be nice would be to save, you know what, I think that's what I'm going to do. I'm going to save this here so we know what we paid for everything. So come Friday, when we look at what we're doing on Friday, we'll know what we bought everything for. All right, because if you look at this one here, you got the 215, 217 and a half. That's a $2.50 spread. All right, we bought it for $2.05. So the most we're going to make out of this is 40 cents. Now this thing has to stay above $217.50 in order for us to realize that profit. Now this one here, WDC, we got 20 contracts, the 74 and a half, the 75. So as long as this one stays above 75, we'll make that money. Now, you see, we paid 35 cents for it, so the most we're going to make on this one is going to be 15. Now, 15 cents is like 45% return. Okay, that's a 45% return for 4 days because we didn't buy it yesterday. We bought it today. Today's Tuesday, so we got Tuesday, Wednesday, Thursday, Friday, 4 days, 45% return. That's not bad. I can't believe we did this one right here. 16 and a half, 17 for 40 cents. That means we're only at, that took quite a while for that thing to fill. Okay, DE, John Deere, this is where we are. All right, let's go back. Okay, John Deere, here we are. We got the 108, 109 calls. Okay, so John Deere started the year out at 81, goes sideways for like 6 months, right into the end of September. Then from the end of September, she jumps up to 91 in November, right around election time. Then it gaps up from 92 to 102. That's like almost $10. Goes sideways, well, a nice little up climb. And then the last 30 days, we've been going sideways, right in the 108, 109 area. So we're at 109 at the moment, and we bought 109.21 at the moment. Right here, this number right there, 109.21. So John Deere, which is DE right here, we bought the 108, 109 for 69 cents. So the most we're going to make out of this is 31, which is right around 45, 46%. Okay, that's a nice return, 45, 46 return. As long as it stays above 109. Now 109 is right down here. As long as it stays above that. Now John Deere is coming up for a dividend in the next 2 weeks. That's the main reason why we got this. Why else? I'm going to show you really quick. She's at 109 right now. We're going to click on this little icon there. We're going to change the chart mode from standard to seasonality. Okay, now here's where John Deere is right now. Now I have this preset to do 10 years worth of data. So this line represents 10 years worth of movement. And this is the average move that it makes. Now we're here right now. Okay, here we are right now. 314. What is this thing going to do in the next couple of days? Basically continue what it's doing now, going sideways with a little tiny bit of an uptrend. Now, the move that we made, that we're anticipating, 108, 109, where we want it to stay where it is or go up. So stocks can only move three ways: go up, down, or sideways. So we're going to make money if this thing goes up. We're going to make money if this thing goes sideways. And we even have a little bit of room for us to go down. It can go down all the way to 109. It's at 121, 109.21 now. So if it goes up, or even stays the same, or even goes down a little bit, we're still making money. And how much are we making? We're making 31 cents, which is not a lot, off of 2,000 contracts. Now, 2,000 let's quickly do this, just for the fun of it, because some people can do it off the top of their head and some people can't. All right, we're looking at, let's clear that. We're looking at 31 cents, and we're looking at 2,000 contracts, and that's going to be a grand total of $620. So we're going to make $620 by Friday if this stays above. If it stays above 109, and it's at 109.21 now. So let's see what the standard chart looks like. Okay, like I said, it's got to stay above 109, and we'll make right around 45%. Not bad for a couple of days, but we have all these ones to look at. So let's look at a couple more. That was John Deere ATVI. Shall we look at that one? I don't need to look at that. Let's go over here. AGU. We already looked at that one. Oh, Dow. Everybody knows who Dow is. Dow Chemical Company. Now they got a 46-cent dividend coming up. Let's check out where they are. DOW, which is the Dow. Now the Dow, not to be confused with Dow Industrial Average, the Dow is just a company that makes chemicals. She starts out the year at 50.22, goes sideways for quite a bit, makes a bottom down in July at 47.5, comes back up to that trading range again, goes sideways right up until right around election. See that? Right around election. Then from there, shoots up from 52 to 63, which is like $10, which is a 20% move within that 1 and 2 month period. Okay, so as you can see, little plateau here, and then with a lot of volume, pushes it up from 61 to 63.50, and she's at 63.50 going sideways for quite a bit. Now Dow only has a 46-cent dividend. Okay, so what do we have for Dow? Dow. Oh, we have two positions on Dow. Okay, we have the 63.5 call, which is 35, which gives us 15 cents, which is right around 40% return if it's it stays above 63.50. So she's at 63.68 right now, 63.68. Okay, 63.50 is right here. So I don't know. Does that look like it can be support, or could that look like it could be resistance? Because if it was resistance over the past couple of weeks, see that right here, this level right here, she just pushed through it the last 3 days. Is you can continue to push through it, or is it going to make new highs? I don't know. Really don't know. But as long as she stays above 63.50, it's going to be profit for us. But you know what? We'll make money there, 63.50. And on the flip side, if she stays above 63.50, we'll also collect another 14 cents, which is basically the exact same position. That's strange. Okay, so looks like we have, so if she goes below, we're going to end up owning, 2,000 shares. Or we could own 4,000 shares, depending on how close she gets to that 63.50. All right, so that's Dow. That looks pretty good. As long as she stays above that, you get 3 different directions we can make our money in. All right, we just did Dow. Oh, Humana. We've all heard of Humana. Okay. Humana's got a 40-cent dividend coming out. All these are the exact same day, the 29th of March. And the date of record is the 31st, which is Friday. Okay. So let's take a look at what Humana is doing. Okay, Humana starts the year off at 185. Goes sideways, drops down, continues and sideways. It makes its low for the year right in the middle of July at 150.37. She jumps back up to that trading range of 170, 173, 174, so in that area. Gets right down to the election day. Now this is funny, because I tell people there's a lot of key dates that you got to remember. Election date 2016 is one of them. Right here. Okay, there it is, November 4th. When's the next day? November 7th. That's Monday, okay? Okay, November 4th is a Friday. November 7th was a Monday. Election day is November 8th. Okay, she jumps from 172 up to 207 in that 1 week period of after the election. That's a pretty big jump. All right, then she's going sideways for quite a while, and now she's at 218. So what are we doing for Humana? All right, before we do that, let's check and see what Humana does, but seasonality. We like to check this because we like to find out where she normally goes. Okay, here we have right here. Okay, we want to go right to that high point right there, see what she does. Okay, here's where she is right now. Okay, basically, what it looks like, right down here, look at the crosshairs. Right here, she's going to go up a little bit, and that's all I need. I basically need her to stay where she is or go up. So let's find out by looking at that chart a little bit closer. Standard chart. Let's go back here. And where are we with Humana? H-U-M. And here's Humana right here. All right, we're looking at the 215, 217 and a halves. Okay, so we got it at 205, so the most we're going to make out of it is 45 cents. Now, 45 cents on a $2 purchase is only somewhere around 20%. Okay, so I'm only going to make 20%. I think I can deal with 20%. As long as she stays above 217.50, which is right about here. I don't really like that because it's kind of close to that new high where she's at. She's got 1, 2, 3, 4, 5, 6 days of being above 217.50. All right, okay, so it is what it is. We'll see how it works. Okay, that's Humana. Now, I'm going to quickly check and see if we have any questions. I doubt it because we got started kind of late. Okay, so we got 3 guys out there. Hey, how y'all doing? Any questions, just let me know. All right, question is going to go right there. All right, whatever. Let's go back to where we're trading. Okay, let's go back to right here. All right, we just looked at Humana. Let's look at one more. Potash. Okay, Potash only has a 10-cent dividend. All right, is it really worth looking at? Why not? Let's just take a look at it, because you never know. POT, Potash. It's interesting. And where are we with Potash? Okay, so Potash is like it's all over the place. It's good if you want to trade it, because it's kind of like a channel trade, you know? You buy it high, sell it low, buy it high, sell it low, buy it high, and it's just like going all the way across all year round. So let's quickly look at beginning of the year, she was at 1814. She hits a high somewhere around 19, drops down to 15, jumps back up to 18 and a half, drops down to 15 and a half, jumps up to 18, drops down. It keeps going all year round. Makes a low, 15.22 in late of July. Keeps going sideways until she hits, hey, lo and behold, election day. Again, election day. And then she goes from election day, she jumps from 16.17 to a high of 19. That's not a big move. 16.17 to 19. That's only a $3 move. Wow, that's terrible. All right, so anyway, goes sideways for a while, and she settles back down to where she is now at 17.03. Now, where are we with potash? Ah, crap. 16 and a half and 17. So we have to make sure potash is going to stay above 17 for the next 3 days. Thursday, Friday, Saturday, Wednesday, Thursday, Friday, 3 days. So as long as she stays above, as long as she stays above 17 the next 3 days, we look to make only 10 cents, which is a 25% return. Okay, so 25% return is not bad. Okay, it's not great. It's not like the 45 we're looking at other ones. 25 is not bad as long as she stays above 17. Let's quickly take a look at the seasonality. It gives you an idea of what we can expect. Okay, here's where we are now. Go to the next hump. This is nothing but up for the rest of the year. All right, it's not a huge up, but it is a gradual uptrend. And I only need it to stay where it is or go up just a little bit in the next 3 days. Wednesday, Thursday, Friday. Friday close, as long as she's above 17, I make my 25%. All right, that's enough of that. Looked at almost all of them. Nothing else I can think of. So let's quickly take a look at some that already did what they did for today. Because, all right, today is the 14th. Take a look at GILD, which is 52. GILD. We want to go to a normal. Well, look, that looks kind of nice. It's a nice steady uptrend for the whole year. You want to go to a normal seasonality, standard chart, sorry. But look at this. This has been in a downtrend. Now, before we even get into whether or not I would have done this one or not, I would kind of question because of the downtrend. Now, seasonality. See, she's going down. But from here to the next up. All right, 10 days ago would have been here. Yeah, so I don't know, because it's staying the same. It's more or less going sideways. You see, 10 days ago would have been somewhere around here. And what's today? The 14th. So 10 days ago would have been the 28th of last month. See that? 10 days ago. Okay, so here's where we are. And the 28th would have been way over to here. All right. So without looking at the numbers and without figuring out exactly what's what, I'm not 100% sure I would have done this one. And we have to wrap it up. My battery's getting low. Okay, I'm not sure I would have done this one because the seasonality is showing it, you know, from where we are now. 14 days ago, I would have looked at it. You know, from the 28th, which is right about here. This is what I'd be looking at, doing this. It's like going sideways, tiny bit of hump. Yeah, I might, depending on what the other software says. And it's a 52-cent dividend. The chart didn't look that great. Seasonality looked okay, but this doesn't look okay. So if we go back to March 28th, and February 28th, right there. Okay, that's what we've been looking at, and yeah, I probably would have gotten into this one because there's this nice little, gap down. Usually when you have a gap down on a stock like this, especially a dividend paying stock, it would depend on what the other software looked like also. So, if you go to our website, the 10-minute trader, and you go to the members area, if you're a member, it's not that hard to become a member. Just go there and you just sign up to be a member. You get access